Hi traders, you're welcome back to the Forex Geek channel and you're welcome to this video. In this video, we are going to be looking at a popular figure in the Forex industry. He goes by the name Jim Simons. Okay, so we're going to be looking at the world of Jim Simons and a strategy by Jim Simons. All right, the man who transformed Wall Street with data and mathematics. Yeah, that's the man, Jim Simons. So his strategies are not only unique, but have also helped redefine how trading is approached in the modern financial world. Okay, so if you are ready to learn the principles that made Simons the Quant King, stay tuned. Hit that like button and don't forget to subscribe for more deep dives into trading strategies. Okay, first let's talk a little about who Jim Simons is and why he's such a legend. Now, Jim Simons founded Renaissance Technologies, a hedge fund that's one of the most successful in history, known for achieving returns that most traders could only dream of. But here's the kicker. Simons didn't come from a traditional finance background. He's a mathematician who used his knowledge of data science and algorithms to dominate the markets. Simons didn't make decisions based on gut feelings or traditional technical analysis. Instead, he built complex quantitative models that analyzed massive amounts of data, picking up on patterns and trends others missed. Now, his revolutionary approach turned his hedge fund Medallion into one of the most profitable funds ever. Simon's strategy is all about data, lots of it. His approach is known as quantitative trading, meaning it relies on mathematical models and algorithms. Instead of manually picking stocks or currencies, his team uses algorithms to make high-frequency trades that capitalize on minor market inefficiencies. Okay? In forex trading, these tiny inefficiencies can add up to significant profits over time. One of Simons' key principles was diversification, not just across assets but also in data sources. Simons and his team collected information from everywhere: stock price histories, news feeds, weather reports, and even satellite data. With this massive amount of data, they could train their models to make predictive, data-driven trades. I can only imagine, okay? But here's the secret sauce. Simon's models adapt and evolve, okay? His strategies aren't static. They learn from both successes and failures, continuously improving to stay ahead of the market. This constant adaptation is one of the reasons why Renaissance Technologies has been able to maintain high returns for years. Now, let's talk about how Simon's strategy can apply to forex trading, which is fast-paced and incredibly volatile. The forex market moves based on global events, economic indicators, and other factors that might seem unpredictable. However, by analyzing historical data and current trends, Simon's algorithms could identify patterns that occur frequently enough to capitalize on. Imagine having an algorithm that predicts minor fluctuations between currency pairs, allowing you to enter and exit trades at precisely the right times. This is what Simon's quantitative models do. By using high-frequency trading techniques, they make multiple trades in a short amount of time, benefiting from even the smallest price movements. While most traders look for big trends, Simon's strategies capitalize on these micro movements, creating opportunities that add up over time. So what can we learn from Jim Simons' approach? First, data is king. The more data you have, the better you can understand market behavior. Even if you are not building complex algorithms, you can still gather and analyze relevant data to guide your decisions. Second, emotions have no place in trading. Sometimes traders tend to bring in their emotions into trading, but it can really have negative impacts. Okay, something that Simons emphasizes is emotions have no place in trading. Okay, he emphasizes that by leaving the trades up to models, not people. Emotional trading often leads to risky decisions, but a data-driven approach keeps you focused on strategy over impulse. Lastly, think about diversification and adaptation. Simon's team constantly refines their strategies, testing new data and evolving with the market. Traders at all levels can benefit from evaluating their strategies regularly and adapting based on new information. Okay, and there you have it. Jim Simons' trading strategy is an inspiring example of how data, mathematics, and technology can give you an edge in trading. Even if you are not a hedge fund manager, there's so much we can learn from his approach. If you enjoyed this breakdown, make sure to give this video a thumbs up and don't forget to subscribe to the channel for more insights on trading strategies. Let me know in the comments what's one strategy from Jim Simons that you'd like to try in your own trading. Thanks for watching, and I'll see you in the next video.